Hey guys, it's Scope with a video on how to identify gaps in the market, how to trade gaps in the market, and low key, how to map out larger rewards with minimal risk. But if I don't get to that today, bear with me. I've had a long day, but I want to get this video out. So, starting with that, you can see from here, I'm on the daily chart. Just a naked chart. Let's just look at it for a second. If the market has quote unquote topped or whatever, it's a very high chance that price can fall and plummet a very long distance. So let me show you what I mean. I'm gonna take my horizontal ray. Bow. Why did I mark that? Well, from a naked chart, I see that there's a lot of room to the downside. But if I look to the left, I see the last buy up, or the previous buy up before this one, was over here. So that tells me there are buyers here. Price has bought up from here before, so I'm going to mark that. Right? Then I'm going to mark the previous buy up. What is the previous buy up, Cindy? Previous buy up is where price bought up previously. Just like previous sell off would be here, technically, here, and I'll probably say here, maybe here. Those are all time highs. Probably particularly here. So I'm gonna go ahead and mark that because price has not survived above 30,753 on a daily. You can also mark here if you like. That's gonna help you sleep at night. So, of our previous sell-offs and previous buy-ups. Okay, now from my chart, you see that there's a gap on the daily. Where is the gap? The gap is right here, June 12th to June 15th. That is 2 months ago. So, I don't think we've had a gap since October. Okay. Gaps are very prevalent in options trading, as well as gold, if I remember correctly. But yeah. So we're gonna mark the gap. And why are we on the daily? So we can mark the gap. This is the gap. If you need to label your gap, you can label it. And you can say June 12th gap. All right. So we have labeled the gap by using a rectangle. So let's go down to a lower time frame so we can see how price has reacted in this gap. We're going to skip to the 1 hour. And we're going to go back a few weeks. So, beep, boop, boop. All right. Now, of course, when you get down to the lower time frame, you can kind of straighten out your gaps if you are a perfectionist. But yeah, this is the June 12th gap to the June 15th. Price gapped up, and it's kind of been moving above it for several weeks. First time we get a gap play, which isn't the best gap play, but it's been overnight. Let's just say that. This is June 22nd. Price begins to fall, and it falls through the gap. Why are we looking at this gap? Because whenever there is a gap, price has to fill it. Price must fill it. And sometimes, if it's as near the top as this one, price will fill it multiple times. That does not mean every time price begins to fall towards the gap or rise towards the gap that you need to be trading the gap. Sometimes you can trade the gap, say this is overnight, you can trade into the gap and then get out here. You can either trade into the gap or you can trade the reaction from the gap. So take this for instance. This plummeted towards the gap, but it did not go through the gap. That means if you waited overnight or for a night session, you could have waited for price to reject the gap per se and launch from the edge, and then you could trade upwards. Same thing downwards. This happened overnight. It's falling. These are fat candles. So I personally would trade through the gap here. Okay? I would not think price is going to fall continuously through this gap, because as you see, it created a base for the next day to 2 days. And one way to get trapped in a gap is you see that there's a lot of wicks that happen inside of a gap. So you really have to be careful and really be on a smaller time frame to be able to read price action. What are the candles doing? Are there wicks? If there's wicks, you don't need to trade it if you're going to be a holder. If you're a scalper, you are free to trade the wicks as long as you get out before it pushes back up. So, as you can see, from how price reacts in these gaps, price goes crazy through the gaps. This is June 25th. So we're in the month of June. Price is going crazy. There's just so much momentum, both to the upside and to the downside through the gaps, right? So it is something that you should look into studying, and it kind of will make you a precise trader, because price is very reactive, right, to these imbalances, because it wants to be balanced. The market, everything wants equilibrium. Not to sound like a trader bro, but that's the nature of the world. Equilibrium. If there's imbalance, there's a gap, it has to be filled. Alright, so it's been getting filled off and on. You can play the reaction above it. It reaches a peak, it begins to fall through. If you're a holder, sometimes you can hold through a gap. And as you see, each time it returns to this gap, it goes a little bit further with how the momentum candles shape. The thing I would caution is do not enter inside of the gap. You either are positioned like here. Remember this day? This is July 2nd. You're positioned at the top and you're like ready to go and you're watching it fall. Or you're at the bottom and you're watching it climb. But I would not enter inside the gap. That's just me personally. I feel like momentum is better. This doesn't count. Momentum is better when it is heading either down into a gap or up into a gap, not when it's middle of a gap. So now you see here, it taps the gap, it wicks the gap, and it does not maintain inside the gap, so it falls basically. It falls to the night, whatever. Watching it make some shapes, it continues to fall. There's a gap here. If you want it on like a micro level, as in like you're just looking at, say you're on a rolling contract or not a rolling contract, this is a rolling contract, but if you're on like the NQU, right, and you see this, you can mark this like when price gaps up. Let's just mark it. You can mark it from you're there when price opens at 6 o'clock. You're like, okay, I'm gonna wait to see, and I know eventually price will fill this gap. I feel like that's how I see gaps on a macro level. Like if I wake up or if I'm not on the charts during the day, price gaps up either with earnings or whatever makes price gap up, I will wait for like I would wait for price to return to the gap basically, because I can see here even when it pushed up, it wicked, it didn't survive, it didn't make a candle above this candle, right? It just began to chill. So you can mark that like this, and then you just wait to see price by the morning time, 7 o'clock. You're like, okay, price is not sustaining over this high, so I'm just gonna get in position and it's gonna head towards the gap. I know that. One, I know that because I've traded gaps since I learned how to trade. But you're gonna know it because I'm telling you, and then you can back test or whatever, and you can see price returns to the gap. Price returns to the gap. But that's not the gap we're talking about today. But anyway, price falls through, continues, it kind of consolidates, so we don't want to trade that. Does a little weird thing, and then here we are with July 29th, and price falls, and then we get a buy up, and price trends upward for a while. Here's another gap. Let me show you how I would trade that. So again, it ended somewhere, it opened somewhere, that's a gap. I would wait until the morning. I would place an alert, actually, like this: entering rectangle, exiting rectangle, inside whatever you want. I would place an alert, and then once it hit here, I would just take the gap. I would take the gap and I would exit the gap. Because as you can see, sometimes like the end of the gap is the end of the gap. It's filled, now it's going up. Okay. So continues up. Runs all the way up, and now it has returned overall to the gap from June, and now it is August. So it's on its way. It's a magnet. You can think of a gap as a magnet, a macro gap. That means the gap is visible on the daily. You can trade micro gaps such as this one, but it's not going to be visible on the daily. So it doesn't really have as much momentum as a daily gap. We'll call it a daily gap, okay? So it leads up, bow. We're not going to trade inside the gap. If you were in the trade, I would take it, I would exit here. Because now it's kind of vaporizing it. It falls out the gap. Not the best trade for me, because as you can see, it's like weird Ricky candles. You know, and it's not going super far down. It's kind of just vibrating around, hovering around the gap. So that like that, it's moving through the gap. This is not tradable to me. That's why I like to mark gaps. It is not tradable, and it's also moving weirdly side to side. It's not trending up, it's not trending down, right? Okay, cool. Now we're back to 32.75. It's not going up to all-time highs. It's literally losing momentum, even though it filled, quote unquote, the gap, right? Some people would have took this. They would have took August 13th last week. You know? And even if you didn't, it just shows you when it's inside of a daily gap, there is a lot of momentum. So if you ever want to take inside of a gap, you could. I don't, but you know, but that's not always a guarantee, because what if you got in here thinking, I'm inside the gap, and then look, you get chopped the fuck up. So anyway, we see that price rejects, does not really survive up here, rejects again. This is one of my setups, and it's kind of how you can get a better entry. It's called the Python, but anyway, because it's not surviving above it, so you would just take it on down. And I like it because this is more of a hold trade if you were swing trading, because it's not surviving above, so it has nowhere else to go but down. So you swing it, through the gap, but I would just be careful about price targets. That's why this is kind of like the easiest price target. And if you want to load up your contracts, you can, or whatever. It falls out the gap. So this is the move I was talking about yesterday. This is how you can say you miss the swing trade, okay? Or you're like, price is falling out the fucking sky. It's setting up in the gap, right? Or it's navigating towards the gap. All right, so let's look at yesterday's. I'm gonna go on a smaller time frame. I'm gonna go on 5. Boop, boop, boop. All right, so let's look at price for it. All right, so it's 7 o'clock somewhere. 7 o'clock here. So price wakes the fuck up. I think it's FOMC. That don't really matter for this, but there is momentum in the market. All right, price begins pre-market to go up towards this gap. That's when I was like, oh, it's setting up for a gap play. There are different ways you can play the gap play. You have to be on the chart reading price for any play to make sense. Period, point blank. Okay? So, seeing how price is acting at the edge of this gap lets you know that price is getting ready to fall. Why is price getting ready to fall? You could identify a chart pattern. This is an M, technically. But yeah, it's just not making any highs, right? It does not get above here. It does not survive within it. Like, now the gap is acting as a force field. And 925, right? 925. Market opens at 930. Okay? So you're gonna wait until 9:30. I know sometimes I tell people to wait till 9:45, 10 o'clock. It depends on the state of the market. But in this case, you have your confirmations that price is not going up. So you would prepare for a sell. So let's go on to 1 minute. Our favorite time frame. Let's go over here. All right. See it even clearer now what I'm saying. Price is not surviving. The candles are being weird. That's that intuitive precision that we build as snipers, where you're like, okay, this is a mess. So 4 minutes to open, it starts to dip. Okay, cool. You get a wick. 9:30. 9:31, it starts to push up. You're watching the edge of this. You're watching the edge of it. You see this, you see this, you see a wick, and then it starts. It doesn't go anywhere. You get in. That's it. I gave you like 4 confirmations. That's why you kind of need to be on the charts earlier than 9:30 so you can see what price is doing. And you need your markups before you even think about trading. Because you need the framework. So when you sit at the chart, you can be like, okay, this is what I'm going to look for. And then you take it. And it fell literally, what is that? Seven, what did I say? 7-4. It fell, what was that, 300 points? So let me show you. I'll do my, no, I won't. I'm not gonna do that. But, yeah. Do 3 contracts, that's a decent, that's a fat ass check. Do 1 contract, it's a fat ass check. If you want to do micros, load heavy, it's a fat ass check. But besides the check, you need to learn how to trade both proactively and in retrospect. And it just takes practice, it takes time. But that is how you would trade, outside the gap. And then you would leave it the fuck alone for the rest of the day. And you see, it's not returning back to the gap. The gap is literally a force field. It's literally a force field. And now we got this stupid ass fucking sideways downward weird thing, right? So whether or not you trade at night or whatever, a little baby gap here, it's just like you have to be very aware of price action, candles formation. I already taught on candles formation in my boot camp. There's so many YouTube videos on candle formations. If you have any questions about candle formations, please reach out. I feel like I explain it very simply because it is very simple. And it's really the building block for, being able to look at a naked chart and trade it all the same, right? But that is the video on gaps. Remember, you can trade the reaction of a gap, so you can retrade. You can trade a gap rejection. You can trade into a gap as long as you enter and there's momentum before the gap. Do not trade inside of a gap because it's very unpredictable. And you can trade also outside of a gap. So it's like the rejection downwards, and then I guess it would be a bounce above. But yeah, that's it. That's all I got for you. Peace.